You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to get started for the town of Branford Board of Finance regular meeting, August 20th, August 30th, 2021. And first on the agenda is to approve the minutes of the May 24th, June 15th, and June 28th meetings.
I've read the minutes, Joe. I'll make a motion to approve all 3 minutes.
Charlie made a motion. Seconded by Jeff. Discussion. All in favor?
Aye.
Next on the agenda is citizens communication. And before we get started, I would just like to have a brief moment of silence for a former member, Lorraine Young, who passed away recently. And she was a great addition and member of our board, and I'm going to miss her. Thank you. And under citizens communication, I will entertain members from the public who have a comment with regards to the agenda items, any agenda items. If not, then I will take under citizens communication an audit report memo from the finance director dated 8/25 of this year. And Jim, you've provided us with an overview. Would you like to cover this?
Sure. Yes, basically, I won't go through the whole letter, but basically I wanted to communicate to all of you and to the folks in town that the audit is complete. As you know, we've filed a series of extensions, and I know that there's been some turnover on the Board of Finance over the years, and we just went through COVID, so kind of looking at how your role with this falls into the code. And I've cited some areas of the charter. I've cited some areas of state statute, just to put it in context. And inadvertently came up with sort of a handy mnemonic to kind of remember what your role is. So you're going to receive the audit, you review it, you're going to regroup, and then you're going to basically, upon doing all that, if there's areas or questions you have, you would then refer it to the respective department or departments for a response. So that's basically what I'm saying. As of today, we still don't have our hard copies. So you have the electronic copies. The electronic copies have been filed with the state agencies. They've been filed as part of our secondary disclosure requirements with the Municipal Securities Board, and also we've sent a copy to the Census Bureau. So you have it. You can review it electronically. Soon we'll have the hard copies for you to review it more thoroughly. I know it's much easier to review multiple documents when they're in hard copy as opposed to printed copy. And then we'll regroup. We typically also reach out to the auditors. The auditors make a presentation. So we anticipate that will happen at the September meeting.
All right. Thanks, Jim. Any questions on this? Okay. Next is to hear a presentation from the Andriol Group and GYL Financial Synergies. with regards to the performance of the Town of Branford Police Pension Fund for the quarter ended June 30th, 2021, and if necessary, rebalance the portfolio. And the presentation will also include the Branford Volunteer Fire Department and the other Post-Employment Benefits Trust, OPEB Trust. Gentlemen.
Good evening. Good evening. Thank you all for having us again this evening. So I'm Robert DeLuca from the Andrew Group, and as customary, I will bring us through a recap of the market environment over the quarter ending June 30, 2021, provide some additional context, bringing that information current through last night, and then Michael will transition over to Michael to cover the experience of the three specific funds. So we'll lay a good background for you as to what's been going on to attribute to the behavior of the portfolios. So with regards to the equity markets, so for the second quarter of 2021, they had strong positive returns, and all overall year-to-date equity markets have been led higher. The sectors leading it higher have been energy, financials, and real estate, which has continued to be quite the opposite of 2020. We have seen improvement in information technology and consumer discretionary. So overall, a very positive trend in equity markets, led specifically by the U.S. large companies as well as mid-sized companies. As anecdotally, the S&P 500 made a new high today. So as you have an ascending stock market, it frequently makes new highs. So that's what's going on in the marketplace. Developed international markets have lagged the U.S. slightly, but have continued to improve. The emerging markets have, in the previous quarter, through the end of second quarter, had behaved okay or well, but they have since diverged throughout the summer, as we've seen a meaningful decline in the Chinese equity markets, which has brought the emerging markets lower. So we've seen some divergence in the large markets around the world. Overall, when we look at the valuations of equities, they are in fairly good health. While the PE ratio appears to be high, we've seen the PE ratio decline from 29 to 27. While stocks are moving higher, so price has been increasing, and the PE ratio has gone down, which means that earnings have been increasing a bit faster than price. So we are continuing to expect expansion of earnings over the coming 6, 12, 24 months. So we're constructive on what we see in the stock market overall. The fixed income markets are quite a different marketplace right now, very much governed by what the Federal Reserve is doing. Our friend Jay Powell and his team at the Federal Reserve. So they've continued to keep the overnight lending rate, the federal funds rate, anchored at around arguably zero. And they continue to be an active buyer in the bond market of everything out to 3 years, which has increased their balance sheet significantly to roughly $9 trillion plus or minus. So the big thing that people are talking about is, when will the Federal Reserve begin to raise interest rates? When will the Federal Reserve do something about the size of their balance sheet? And our expectation is that we think they will start to do something about the size of their balance sheet well before they do something about the overnight lending rate. As we look at things and as we're seeing a consensus building that towards the end of this year, we will see the Federal Reserve embark upon what they call taper or tapering. And what that means is that, and you'll start to hear people talk about that more in the media, is that they will start to slow down the purchases of new purchases in the marketplace, or stop reinvesting bonds as they come due. We think those are the first couple of key steps from the Federal Reserve as they look to pivot towards how are they going to address inflation. And right now they really can't do much with the overnight lending rate because of how large their balance sheet is. So as they start to embark upon tapering, potentially in the fourth quarter of this year, if that were to be the case and they proceed from there, then we would expect potentially that they start to raise interest rates in 2023. What does all this mean? It means that on a near-term basis, we think fixed income assets will be challenged. As if interest rates start to rise, that will depress bond prices. So fixed income assets can on a short-term basis, have a negative return or a drag on the actual experience of any investment horizon. So what that means is that when you look at the actual return of the index, whereas the U.S. equity markets are up roughly 20% year to date, the U.S. bond market is negative roughly 1% year to date. So quite a difference in experience due to how interest rates have risen year to date. But they have come back down from where they were earlier in the year. But the yield curve has continued to flatten, and some of that is more technicals than fundamentals. And that gets into the behaviors of the bond market and a broader global demand for U.S. Treasuries on a short-term basis. So, but overall, we're constructive on the overall economic activity. We see employment continuing to trend towards the Fed statute of full employment. And inflation is expected to continue to run above their target on a near-term basis. And that will be something that we'll be monitoring closely to see how that flows into the economy further as to how transitory that is versus systemic. So, but we continue to think that the actions of the Fed to reduce their balance sheet will be very important to set the stage for how they can fight inflation should inflation be hotter than what's currently expected. So kind of that gives you kind of a little backdrop. And I'll let Michael take us into the police pension to review the experience of the fund.
Okay. Thank you, Rob.
Thank you. So if everyone would please turn to the first section of their book, page 19. We'll start with the 35,000-foot overview, and as we usually discuss on the right-hand side, the performance of the portfolio continues to be consistent with the underlying benchmark going back to April 1st of 2003, the inception date. The annualized return has been at 6.3%, just a few basis points shy of the benchmark at 6.37%. That return has come with about 8% less volatility than that of the benchmark, and that is indicated by the portfolio beta under the risk summary statistics column. And so where we've had returns substantially equal to the benchmark with about 8% less risk, that translates into a positive risk-adjusted return, and that's signified by the alpha and the Sharpe ratio under the risk summary statistics section. Alpha is a measure of the return versus the expected return based on how the dollars were invested. In other words, has there been any value added on a risk-adjusted basis to the portfolio? And a positive number is an indicator that yes, there has been. And Sharpe ratio, though we don't normally review that, it's a worthwhile statistic. What Sharpe ratio is basically risk-adjusted value added above and beyond what you would have gotten investing in cash. So, mathematically, takes a look at the return above a cash or a treasury bill return and divides it by the amount of risk taken. And all things being equal, a higher number is better. And so you can see a 0.68 versus 0.63 for the benchmark, a positive Sharpe ratio. So two measures of risk-adjusted return to the positive. In dollars and cents, what that all means is at the bottom right of page 19. We began on 4/1/03 with $8.31 million in the pension plan. Since that time, there have been net inflows of $430,000. As always, ignore the contributions and withdrawals because that includes when we move money between the accounts and focus on the net number. So in other words, about $430,000 more in contributions have been made than benefits paid during that time period, and $21.285 million in earnings. Bringing us to just over $30,027,000 at the end of June. Since the end of June, as Rob alluded to, the markets and the portfolio continue to move in a positive direction. We've had, since the end of June, there have been contributions of $1.27 million, withdrawals or benefit payments made of $405,000. So that goes against the contributions. So net cash flows have been $866,000, and then earnings of approximately $159,000, bringing us to an ending value as of the close Friday of $31,052,000. So with that as a backdrop, if we turn back a few pages to page 15, we can dig into the performance. As Rob mentioned, the first half of the year was certainly positive for the equity markets, slightly negative for the fixed income markets, as we saw a spike in interest rates at the beginning of the year, which has since ebbed a bit, but still slightly negative returns for the fixed income markets. At the top line for the quarter, the pension returned 5.23%, besting its benchmark, which returned 5.05%, and for the trailing 1 year, or the end of the most recent fiscal year, the return was 23.91%, spot on with the benchmark, which returned 23.87%. As you can see, for longer time periods, 9.34% for 3 years, 7.85 for 5 years, 6.28 for 10 years, and 6.3 since inception. The equity portion, of course, continues to post really superb absolute returns, and on a relative basis, the performance of the equities and the pension have been consistent with their underlying benchmark as it continues to be passively invested. For the quarter, equities were 7.62%, and for the trailing 1 year, the equity portion of the portfolio returned just shy of 45%. As mentioned, fixed income was nicely positive for the quarter, although that didn't completely erase the downdraft we saw during the first quarter. So we had a return of 2.18% for the quarter, although still negative for the year to date at minus 1.47%. And for the trailing 1 year, fixed income was slightly negative at minus 0.6%. That was balanced with the high yield fixed income, which continues to have a positive experience with low interest rates and the so-called risk-on trade environment. And so we saw a return of 2.75% for the high-yield portfolio for the quarter and just over 15% for the trailing 1 year. So with that, I'll pause and open it to any questions.
Questions from the board on this? Good, proceed, Mike.
Okay, great, thank you. We don't have any recommendation to rebalance the portfolio this evening. We're working with the finance director on discussing the rebalancing strategy, and so we'll follow up at the next meeting with that. So, but right now we're really within the confines of the policy. We're at 40% fixed income, slightly behind the policy, which is at 42.5%, owing to the relative strength of the equity markets, but well within the parameters for the set forth by the investment policy statement for rebalancing. And as Rob alluded to, we're kind of neutral on the fixed income markets going forward. So rebalancing at this stage would entail primarily deploying dollars to fixed income, which we want to hold off on doing for a little bit of time. So with that, we can turn forward. I apologize, these are a little bit, I think they're out of order, or at least my book is out of order. Tab 3, I believe, is the volunteer fire pension fund. And if you look at page 19 of the volunteer fire plan, again, from a 35,000 foot view, there's about 5.5 years of history there. It was back in December of 2015 that the volunteer fire plan was separated from the police pension. And so the return, slightly less than that of the benchmark. That's owing primarily to the relatively high levels of cash versus the invested portion of the portfolio, given the relatively short time horizon. So the return, going back to inception, was 7.85 versus a benchmark at 8.25. Again, the risk quite a bit less than that of the benchmark. You can see the beta at 0.91. So there has been approximately 9% less volatility than that of the benchmark, and much like the police pension, that translates to a positive alpha or risk-adjusted return, and that is again just slightly positive, but a positive number nonetheless for the based on the relative risk taken by the plan. On the bottom right, we can see in dollars and cents, the beginning balance and the is somewhat skewed because these were dollars that were separated from the combined pension back in 2015. But you can see just over $1 million was the initial balance, then the 55,000 plus the 954,000 you see, and then we have $482,000 of earnings, bringing us to an ending value on 6/30 of $1,493,000. Since the end of the quarter, we have had $87,000 in contributions, no withdrawals, and $11,000 in earnings, bringing the ending value to $1,584,000 as of the close on Friday. So moving back a couple of pages, if we may please, to page 15. The returns are substantially similar in the near term to that of the police pension plan. The portfolios are invested in a virtually identical manner, with the exception that the fixed income is not actively managed owing to the relatively small size of this pool of assets, and it's in a fixed income index portfolio. But the return for the quarter was 5.07%. For the trailing 1 year, we finished the year at finished the fiscal year, at 23.69%. The equity portion of the portfolio, much like the pension returned, or the police pension returned, about 45%, and then slightly negative return in core fixed income at minus 0.54% for the trailing 1 year, although positive for the second quarter. And then in the high yield space, again, additive relative to core fixed income, returning 2.7% for the second quarter, and for the fiscal year ending June 30th, a return of 14.09%. And much like the police pension, no recommendation to rebalance the portfolio this evening.
Okay, Charlie, you have a question?
Michael, is this 40% fixed and 50 equity?
It is the overall allocation, or the target rather, is I believe it's 40% fixed in cash. Yes, that includes the cash, yes.
Okay.
So when we look at the equity to fixed income allocation, we're basically we lump together fixed income and cash.
That's the same as the police.
Yeah,
Okay.
exactly.
So that's on page 20?
Correct.
Okay. Glad to see that information there, Charlie. Other questions from Michael? Okay.
Great. So moving back, please, to the OPEB, which is in tab 2. And for the OPEB, let's turn to page 20, please. Inception, actually, we're right at the 10-year mark. You can see 120 time periods. Those are monthly time periods, and the inception date of 7/1/2011. So this just is the 10th anniversary report. The annualized return at 6.05%, consistent with that of the underlying benchmark at 6.16. As you're well aware, we've been long overweight in cash with the OPEB, as we've been very methodical with the dollar cost averaging, and that has led to significantly less volatility at 0.84, so about 16% less volatility than that of the benchmark, which has come with virtually identical return to that of the benchmark. And so that translates to risk-adjusted alpha of 0.07, so that's the highest of the alphas we've seen for the 3 plans. And that also, I had mentioned the Sharpe ratio earlier. You can also see that positive Sharpe ratio on both an absolute basis as well as versus the policy. In dollars and cents, we had a beginning value on July 1st of 2011 of just over $4 million. Since that time, there's been about $24.158 million in contributions, and just under $8.9 million in earnings, bringing us to an ending value of $37,083,000 as of June 30th, 2021. Since the end of June, no contributions and cash flows other than the normal account charges, and earnings of $142,000, and so that brings our ending value to $37,207,000.
Okay, questions?
Okay.
Jim, you all set? All right, folks, I think we're good for tonight.
Great. Thank you very much.
Appreciate it, thank you.
Stairs.
Oh, you're on board for number 6, thank you. Okay, next agenda item is to have a discussion regarding the appointment of investment advisors for the Coastal Resiliency Fund, CRF, and if appropriate, approve the following 2 resolutions. Resolved that the Board of Finance appoints GYL Financial Synergies and the Andrew Group as financial advisors to the Coastal Resiliency Fund. And a second consideration is to entertain the motion. Resolved that the Board of Finance authorizes the Treasurer and Finance Director to establish a custodial account with Fidelity Investment Services. And Jim, you provided us with a letter. You want to give us the highlights instead of every date? I mean,
No, I'm not going to give you it.
okay.
No, that's why it's
I'm
in the
just
letter.
teasing you.
No, that's why it's in the letter. Basically, what the reason the timeline is there is, for those that have followed sort of our journey on this path, is essentially that, we set up the fund in January 2019, and here we are in August of 2021, seeking for the folks to invest the assets. It's kind of been a long journey between when the fund was started and where we are today. Once we set up our fund, we always kind of looked beyond Branford. We worked on laws, we worked on strategies. We tried to get the state of Connecticut involved with us. To some extent, we were successful. In other aspects, some of the legislative initiatives, while were deemed to be appropriate and valuable, ultimately did not pass in the General Assembly. Primarily, one was to have the State Treasurer's Office set up the investment vehicle for municipalities to invest their coastal resiliency funds. That was coupled with a component of the Environmental Bill 6441, in which municipalities had a non-tax funding source to do that. So essentially, you had a non-tax funding source, you had an investment vehicle, and you had a statute that permitted municipalities to use those dollars to leverage bonding by making debt service an eligible cost, which, if you model that out, gives a town like Branford some pretty good leverage. We had demonstrated a hypothetical $17 million project without having to tax any more than the $306,000 that we currently tax for in our Coastal Resiliency Fund, if those legislative pieces were in place at the end of the session. Long and short of it, they were not. So we're back to where we were about a year ago with our legislation in place to set up the Coastal Resiliency Fund, to invest the dollars in the Coastal Resiliency Fund. And so it doesn't appear that the state is going to participate in that solution. So we're basically doing it on our own and hiring GYL and the Andrew Group, who you guys are certainly familiar with, have been with the town for a number of years and provide good service as it relates to our pensions, 2 pension funds, and our OPEB trust fund. So I'm going to be working with them, if you approve these resolutions tonight, to start setting up the investment framework for the CRF fund, Coastal Resiliency Fund. It's primarily outlined by statute. So the statute is sort of your de facto investment policy. However, the statute does allow you to get a little bit more aggressive if your town approves an investment policy. But we're going to start out with the statute. If we want to develop an investment policy down the road, we could certainly do that. And again, these folks have worked with us before. I think back in 2019, Harry, you had asked about the costs or the fees of these type of products. At that time, these gentlemen's fees are 15 basis points each, so 30 basis points. And then the underlying investments, anywhere from the ETFs to the other investments all had their own sort of set of fees. So depending on what fund you were in here of these three funds, you're basically looking anywhere from, I would say, 60 to 52 basis points based on where we were at. So essentially, we would add another portfolio to the list of funds that the town is investing. One of the common links to all these funds is that we deem these as vehicles that we're basically investing for the long term, and we're investing to try to match future liabilities. So that's really the philosophical strategy behind this. They're going to help us execute that strategy. And there's some other aspects of the legislation that we'll live to fight another day and maybe take a different approach going forward. But we haven't given up yet. The model is basically, it's been well received by DEEP. The head of climate change planning has a copy of it. They tried to use that to secure votes in the last session, but as many of you may know, that the realtors were fighting against the funding stream, and they took out billboards. They are very active. So in round one, you might say the realtors defeated the existential crisis of climate change in the state of Connecticut, but that's only round one. So we'll see where it goes from here. And but in the meantime, we'll do our thing. So.
Thanks, Jim, and thanks for all the good work on this. Hang on, Harry. What's the dollar value in the fund right now?
Yeah, the dollar value, once we open each account, will be approximately $1.9 million.
Okay.
So it'll be a bit larger than the volunteer fire pension plan, but not as large as the other two trusts.
And can you provide or resend a copy of the statute to the board members?
Yes.
Okay. Harry, you had a question?
Yeah, just a point of clarification. You'll be opening the funds, so what is going to be the direction to our advisors? Are you going to follow the same mix of investments as the others, or are you going to go on a new path, especially since they feel that we're going to roll for the rest of this year and 22? So it's 23 we're going to worry about.
Well, I won't address the role or 23, but what I can tell you is that which I think segues nicely into Joe's last statement, is that it's going to be invested in broad sense according to the statute. So what I mean by that, so if 40% of the fund is in equities, that's what we will. The max we would go up to, and probably a little bit less, so we don't go over it. And then they would, choose to, probably a passive approach that we use here, using, sort of the ETF strategy, exchange traded fund strategy. So I would anticipate it would resemble that. If that answers your question. And coincidentally, that is probably kind of where we used to be with the pension plan. We used to be roughly 40%, 45% in equities prior to some of the changes in the investment policy. So it's not going to be vastly different. Now, those are the similarities. Having said that, there are some clear differences, right? I mean, the Coastal Resiliency Fund doesn't have a predefined cash flow. In other words, there's not participants that are basically paying into the fund. There aren't participants that are getting paid pensions. So it will be a little bit different. As a rule, when we set the fund up, we identified roughly an amount, and it's somewhat arbitrary, but we modeled it based on, I believe, using, I think, like 15% of the fund's balance for things. Generally, you want to use it for items in your coastal resiliency plan, and you want to use it where you can leverage other grants. So, it's possible the fund could have other revenue streams depending on what happens in future legislative sessions.
So the push is going to be for growth and income?
Yeah.
Thank you.
Okay, any other questions?
And the other thing I will just add is that, in talking with both these gentlemen, this would be the first coastal resiliency fund that they would be investing, but they have done some work with other public clients in terms of investing according to like reserve fund statutes. And so there are some similarities to the way the reserve fund statutes are in this, because we sort of piggybacked and modeled the CRF fund after that. We just wrote it a little bit differently because we wanted to get higher returns. So the reserve fund's a little bit more conservatively invested, but so they have some familiarity with that. So,
Thank you, Jim. Other questions from the board?
Can I make just
Michael?
a brief comment, if I may?
Sure.
One of the, I think you'd asked about asset allocation. The statute requires, depending upon whether you have the investment policy that Jim alluded to, between 40 and 50% in government bonds or government agency bonds. So that would have an impact on the relative fixed income portfolio, because of course you have corporate bonds in the pensions and the OPEB. But since the state dictates the fixed income allocation, essentially our role would be to optimize the remainder of the portfolio for the growth portion using your growth and income analogy.
All right, thanks, Mike. Somebody want to move these, or?
Joe, I'll move it.
You move?
I'll move it, yep.
Jeff? It's been seconded by Robert. Additional discussion? All in favor?
Aye.
Aye. All right, thanks, gentlemen.
Thanks you all.
Jim. Okay, take care. Okay, next on the agenda is to consider and if appropriate, approve a request from the town planner for the following budget transfer for fiscal 21 from salaries, $11,560 to for seasonal and part-time, $4,560 and consulting services, $7,000. Harry, how are you? Good evening. Good, and you?
Good.
So we have a letter here from you that points out the needs of the for the transfer. You want to hit the highlights on that?
Sure. Let me start with the request for fiscal year ending 2021. As you're aware, we had a couple of staff turnovers during that fiscal year. In order to cover the absence of people in those positions, we used some consulting money, hired a planning consultant, and we had a part-time zoning enforcement officer just to kind of hold everything together. So what this will do is write the accounts. We spent some money out of there's really regular salary money on seasonal part-time help as well as consulting services. So just adjust everything to make the accounting come out, because we had to do that because we were down 2 staff people.
Okay. Questions on this fiscal 21 transfer? Moved by Jeff. Seconded by Robert. Discussion? All in favor?
Aye.
And you have a second, which is our next agenda item, to consider and if appropriate, approve a request from the town planner for the following budget transfer for fiscal 22 from consulting services, $30,000, into seasonal and part-time, $30,000.
You may recall when I came in and talked about the budget for this current fiscal year, I talked about what we'd like to do with the extra, it was $25,000 increase. And I've highlighted the 2 items I talked about then in the memo as numbers 1 and 2. One was to assist the zoning enforcement officer and the department staff in conducting and documenting field inspections and all the work that the zoning officer does. And that position's really, the demands have really grown quite a bit on that job, partly just due to the economy coming back. And it's really come back with a vengeance this year. We have a lot of things going on, a lot of development you've seen growing on in town. So the zoning enforcement officer has a role in inspecting those projects also in addition to the building and other code people. We're also looking to have help for us in implementing the town's permitting software and other changes in how we do business, trying to move from more paper-based to a digital-based way of doing business. In the absence of the zoning officer who left to take a job in Stratford, we found out the person who retired from that job in Stratford that our zoning officer took was a resident of Branford and was interested in doing some part-time work after he retired from Stratford. So it was a wonderful fit. He came in and, as our zoning officer was leaving to go to Stratford, filled the gap for a while until we hired a new person. Rather than going out and trying to find a consultant, it turned out that this person really, I think, has the mix of skills to address the two tasks we want to accomplish. He's a very experienced individual. He was in Stratford for 35 years, knows our town well, lives in Short Beach. So it seemed like a natural fit. So we did keep him on, and at this point, really looking to kind of formalize that and shift the money that we were going to spend in consulting into part-time services to pay for this person who's already been helping out quite a bit, to tell you the truth.
Thanks, Harry. Questions? Charlie?
Harry, it's possible to get somebody to work 15 hours a week?
Is it possible?
I mean, you found somebody?
I did.
What? Okay, thanks.
You need somebody?
I need a whole
Nobody else gets to leave the department.
I need a whole bunch, so if you find somebody.
All right, I'll keep it in mind.
Wait a minute. So you don't see this growing into a full-time position, do you?
I don't at the moment, given what we need. I think we just need the part-time help. Some of it might be, for a year or two to get us over the transition into a more digital, way of doing business. At that point, I think we need to assess where we are with the demands on the department, the economy. I'm hoping that once we move to more digital based, that things will be easier for us as staff as well as being easier for the public.
Okay, thank you. Other questions? Moved by Robert.
Second it.
Second by Jeff. Discussion. All in favor? All right. Thanks, Harry.
Thank you very much.
Okay, next, number 9 is to consider and if appropriate approve a request from the lead trades for the following budget transfer for general government building, GGB, from regular wages and salary, from wages and salaries, $16,120, uniforms, $2,800, purchase services, repair and maintenance, $25,000, equipment, $2,000, membership and conferences, $1,142, for a subtotal of $47,062, into utilities, water, $47,062. Brian, welcome.
Welcome, thank you. Good evening, everyone.
Good evening.
As we all know, that the cost of electricity and natural gas has risen considerably, and also taking over all the utilities for the community house is the reason for asking for this transfer.
Okay. Questions from the board?
So
This is all Alex.
This is related to Alex's memo about irrigation of all 13 fields, Alex, is that correct?
No.
So what's the
breakdown?
Yeah, is there more detail with regards to where the water consumption is? Is this the building or the grounds?
I take care of electricity, natural gas, and water for the community house and all the other buildings I take care of.
Okay.
And
You
there
take
was-
care of them, but they're all in your budget.
Yes, sir.
Yeah.
So Joe, Alex sent us a memo earlier today about irrigation at 13 parks. Is this water use related to the irrigation?
Yeah.
Because that's coming out of his budget.
Right.
That's in his budget. Jamie, do you have comments on this?
Yeah, I was just gonna correct it. The irrigation comes out, it's still in the rec
Thank you.
department. I think this past fiscal year, the one that we're reconciling, I think that was the first full year when additional building, the community house, was added into the GGB budget. I think, so beyond the fact that we had the rate increases with gas, electricity over this past fiscal year, and also the added building into it. I think there has to be a little reconciliation of how much was actually transferred out of the rec department budget when, for utilities to cover the cost that was going into this. The other thing, that building, remember the old community center, there was, that was heating oil. So that was a separate account to heat that building. Now it is gas and electricity. So I think, it was going to take us, we recognize it was going to take us a full year to establish a baseline. The one thing I will just add, I think there has to be a little more, analysis of where this falls, but I think we're going to have to, if you look at this current fiscal year, I think it was held flat, so we will have to come back at a later meeting and provide that additional detail to adjust this current fiscal year budget as well.
Yeah, not to put you on the spot, Brian, but $47,000 for water is
No, it's not. It's electricity, natural gas.
It's water and utilities. Utilities encompassing. That's it's not just water.
The account is a misnomer.
It's all utilities.
Yeah.
It's gas, electricity.
Okay.
And Alex said a short sale, so it helps.
Well, I just think it was a different. There was a different system.
Water for the community house is the least of the utilities.
But
all by gas and electricity is the big.
All right. We will get clarification on it.
It is all utilities, Joe. This is not just water.
All right. So it's been moved.
I'll second it.
And seconded, so we're moving on. There's an additional discussion. All right. All in favor?
Aye.
Aye. All right, Brian, you're all set. Thank you. Next, item number 10. To consider and if appropriate, approve a request from the Board of Fire Commissioners for the following budget transfer from, I'm going to read these, it's going to take me a little while, from the regular wages and salaries, $97,044, overtime, public events, $11,600, CMed, $500, professional development, $10,700, employment testing, $18,100, hydrants, $15,000, other fuel, $1,461, purchase services, repair and maintenance, $9,137, other supplies, $3,000, special details, $756. Fire marshal stipend, $6,600, vacations, $6,200, holidays, $7,400, volunteer stipend, $4,950, longevity, $1,500, accrued payroll expense, $3,700, stipends, $4,999, uniform allowance, $1,300, ambulance billing, $15,000. Fire prevention, $2,800, administrative costs, $1,000, communications, $1,900, volunteer equipment replacement, $6,000, membership and meetings, $1,300, contingency, $11,815, going into overtime, $82,258, medic, part-time, $17,186, educational incentive, $43,800, medical supplies, $67.59, steward, $756, and replacement for sick, $93,003 for a total $243,762. Before we let you explain some of this, Chief, and welcome, I'd like to ask what the contingency balance is there, Mr. Finch.
Okay, you have a fair number of items on your agenda tonight for old year and new year contingency. The old year contingency balance with all of these items would be $465,994. $465,994.
Okay. Any new year balances transfers out of contingency this year?
Yeah, the only item I spotted on the agenda for the new year was a transfer from Human Services for wage settlement, and that would leave a balance of $779,392.
Thanks, Jim. Chief, how are you?
Good, Joe, thank you. First, I'd like to apologize for coming to the board so casually. I was at a fire and didn't have time to change.
Okay.
So apologize for that. We had a tough year. We had, at any given time, 3 to 5 people out. 3 of them for very long-term following surgeries, a deputy chief, a captain, which are two of our more expensive employees, and then various firefighters throughout the year, which cause the great majority of all the overages. As you know, if they're off, they're replaced, and these are all primarily the replacement accounts that are over. I had a very large surplus in regular wages and salaries because when they are being paid either through workers' comp, we get some money back through that. And then, of course, we had a retirement with Chief Heffernan. So that's the surplus in the wages and salaries. And then just I'll hit real quick some of these other surpluses because I'm sure there might be some questions on that. But hydrants, as you know, is difficult to predict. I'm glad I had the surplus in it. And then professional development, we had the overage and educational incentive. It was some plans due to COVID. We had a lot of our mandatory stuff pushed into this year, and normally we would be able to cover a lot of these through the overtime account, but because of all the injuries, we weren't able to do that. So employment and testing, we had a surplus there. That was plans to cover the hourly costs. So that usually professional development account covers the cost of a class. Educational incentive is what we pay the person to go to the class. So we just moved that into there. And then we had ambulance billing. We had a surplus in ambulance billing. Unfortunately, we didn't have as robust a year as we did previously, but I think a lot of that was due to COVID. It's started to catch up this year, which is a good thing. I think I mentioned before that our transports were, normally we would have 23% of our calls non-transports, which we can't bill for. It was as high as 27% for a consistent period of time. So we had some surplus there. And let's see, any other... employment testing, we pushed our physicals back again because of COVID, so that left us a surplus in employment testing, which is what that is for. And stipend in the fire marshal account was due to Sean Heffernan's retirement, and then most of these other accounts, are fairly tight.
Okay.
For the size of our budget, I think.
Thanks, Chief. Questions on this transfer for fiscal 21, Charlie?
Hey, Chief, the educational incentive is to send the people to class. What's the professional development?
So if we're going to pay for a class, that comes out of professional development, and then the educational incentive cost is to pay the person to go. Okay. There are some classes that are mandatory.
Okay.
That's what that's paying for.
Thanks, Chief.
I'll move it, Mr. Chairman.
Been moved by, I'm sorry, Jeff, you have a question?
Yeah, Chief, has everybody returned to work?
Everybody has returned to work, yes.
Okay, thank you.
Okay, other questions? Bob, you had moved it?
Yes.
Moved and seconded by Harry. Additional discussion? All in favor?
Aye.
All set, Chief.
Thank you, everybody.
Thank you. Take care. Next, number 11 is to consider and if appropriate or approve a request from Public Works for the following budget transfer fiscal 21. From wages and salaries, $24,563, road materials, $243 for a subtotal of $24,806. Moving into overtime, $18,831, road painting and signs, $243, and accumulated $5,732 for a total of $24,806. Welcome, Gary. How are you?
Good evening. Thank you. I'm good.
Good. And you have a letter here from Gary, who's our highway supervisor. Is there anything you'd like to offer on this other than your letter, Gary? Or?
Yeah, basically the overtime shortfall, like the drivers for the overtime shortfall was basically for the time we spent from last year's two storms, Isaias and the tornadoes. We spent a lot of time cleaning up these storms, but we had to kind of forced us to work overtime to perform the rest of the regular public works duties. Also, we had a retirement, we had some sicknesses with this whole pandemic thing. and also some injuries. So again, that kind of forced us to cover the temporary manpower shortage with, just putting some overtime out there and performing our normal tasks. And also last winter, we had a slightly worse year than normal. We had about 40 inches of snow. So in order to keep the roads safe, we put in some time for that too. And then as far as road painting and signs, that was just basically more line striping and signage requests, keeping up with the MUTCD compliances and stuff. So,
Okay, questions from Gary? Charlie?
Hey, Gary, how are you going to do about the replacement of this person who retired after 21 years?
Which person?
I thought you said here the operator retired after 21 years.
Yeah, we have them replaced.
We have them already.
We have replacements, but not. We just someone else retired. So it's been a rough year.
Okay.
We're replacing people. We're just getting caught in that. Well, we'll be fine.
Thanks.
Okay, other questions from Gary? You want to move it, Jeff?
I'll move it, Jeff. Thank you.
Been moved.
I'll second.
Seconded by Charlie. Additional discussion? Questions? All in favor?
Aye.
All set. Thank you. Next is to consider and, if appropriate, approve a request from the Recreation Department for the following budget transfer: from seasonal and part-time, $19,000, to security officers, $5,000, utilities, water and electric, $14,000, for a total of $19,000. Welcome, Alex.
Good evening.
Yeah, for that one. Evening, Alex.
Yeah, I sent you a letter explaining our transfers. One was irrigation systems at all 13 parks and facilities that we have, also including the clay tennis courts at Foot. We have to water pretty much every day at Foot Park with our clay courts to keep them going. It's nice when we have some natural Mother Nature and rain, but again, it dries out a lot. And also some extra watering when we do our top dressing of fields. In the last couple of years, we have had some dry seasons throughout, going back to last year. We're talking about last year, spring into the summer and fall, which was unusual. So, and again, I think I explained at the budget meeting that we were trying to get better controls on some of the areas. So probably the most water that we do use in irrigation is at Foot Park, because not only do we have the fields, but we also have the clay tennis courts. There's 8 of them. And number 2 is also pretty much at Veterans Park at times. But we do have, all the major parks have irrigation all over. We have irrigation on the town green. We have irrigation also at Branford Hills, which is newer. And we haven't had to utilize that completely yet, but we're getting there. So we might have to adjust for next year. So that's it on the irrigation. I know that I came in pretty flat on the utilities. Again, utilities just doesn't only just cover water, it covers gas, electricity, and water. And back to the community house, the biggest expense at the community house is really with electricity, followed by gas, followed by water. And number 2, security guard shifts at the community house. We kind of added them. We added some extra shifts when we could, because those are the guards that utilize, they're going back to school next week, so they do the crossing. We have about half a dozen of them that work for us, and then also in the summer they are the guards that are down at Branford Point, Parker Park. And then I've been also utilizing some of them during the year at the community house as an extra person when we first opened that, trying to keep an eye on vandalism. One of the biggest problems we have, and I'm saying this publicly to the residents, we do have a dog park at Young's park, but everyone feels that every park is a park to walk a dog. You know, I was a dog owner myself. I never took one of my dogs to a park in Branford other than Young's Pond a couple times. So I know it's tough. The parks are beautiful to go, but we had a lot of people that have been doing it for years that walk their dogs down at Foot Park at all different hours. So we try to have a presence that has worked, has worked pretty much, but it just presents a problem because everyone says they pick up their dog remains, and a lot of them do, and they're good. But it causes a problem with a lot of young kids, and we've had incidences where we've had issues with dog on dog and dog going after a kid or even our workers at times. So we're trying to get a little bit better control. So that's the reason we had that, and they were all within our budget.
Thanks,
within
Alex.
the Parks and Rec budget.
Questions?
Alex, what kind of vandalism is going on? In your letter, you mentioned vandalism.
Well, one example a couple weeks back was they snuck into our the grandstand and they tried to start a fire there. That was one with some old clothes and stuff. So I mean, we do have it periodically, throughout. Pretty much down Parker Park off of the old rock, we might have some. And then also at Foot Park, we've had it before. If we go back to last year, we had it on the tennis wall and stuff. So we've gotten better controls of it. We do have some cameras down at Foot Park, not throughout the whole park, but off of the building. We have them at the community house, but they go a part of the field, but not all the way. And just things that once in a while they'll go after. A lot of graffiti. Just comes with the territory sometimes. Can't understand the reasons, but it happens.
Thanks.
Okay, other questions from Alex? Somebody want to move this? Moved by Bob, seconded by Charlie. Discussion? All in favor?
Aye.
Aye.
Thank
Thanks,
you.
Alex. Next is to consider and if appropriate, approve a request from the Human Resource Department for the budget transfer for fiscal 21 and 22 to account for salary changes pursuant to the collective bargaining agreements for the Branford employees, union contract and water treatment union contracts as follows. And I'll read all the transfers and then we could get into the discussion on this, Margaret, okay?
Absolutely.
So bear with me. We have, what's that?
This one's first.
13. Did we miss 13? Where's that one? Oh, I'm sorry. Yeah, okay. So we'll talk about this first transfer from professional development, $2,085, into employment testing, $1,402, advertising, $433, and longevity, $250, for a total of $2,085. That's fairly cut and dry.
It is. Yeah, most of that is the pre-employment testing that we do on alcohol and drug testing for all candidates hired by the town.
Okay.
Get a little overshare on that this year.
Questions from Margaret on this? Somebody want to move it?
I'll move it, Joe.
Moved by Jeff, seconded by Harry. Discussion? All in favor?
Aye.
Okay. So now number 14 is the one that I previously read, and there are multiple transfers here, so let me read through them and then you can provide the explanation.
Sure.
Okay? Just that's the easiest way. So the first one is for fiscal 21, the 2.5% increase for water treatment union from contingency $24,341. It transfer out for the same amount. Corresponding transfer within the fund is going to be transfer appropriation increase $24,341. And then the expenditure side of wages and salaries, $20,366. overtime $38.97, and accrued payroll expense $78. And I'm going to go through these, and then I think we'll take each resolution on its own, I think, is probably the best. So, resolve, the Board of Finance recommends to the RTM a transfer out of $24,341 to the sewer utility fund to fund salary changes pursuant to the collective bargaining agreement for the water treatment employees union. This transfer will increase the fiscal year 21 budget in the sewer utility fund from $4,608,288 to $4,632,629. Okay. Do we want to?
I'll move that, Joe.
Move
I'll
that?
second.
Been moved and seconded. Discussion? All in favor?
Aye.
The next is from contingency for the fiscal 22 year, from contingency $44,869 into the sewer utility fund $44,869, and the corresponding transfer in the utility fund, which will transfer in $44,869, and the expenditure authorization for wages and salaries $37,632, overtime $7,092, and accrued payroll expense $145. Before I read the resolution, Margaret, do you have comments on this particular contract?
Just the obvious, I guess, is that the water treatment plant contract wasn't approved really until the end of the last fiscal year. So this was not budgeted for this fiscal year, needing it to come out of this contingency and at 2%.
Okay, and are there any other changes in the contract that you think we should know about?
Not that we haven't already gone through. We went through it already.
All right, so I'll read the resolution. Resolved that the Board of Finance recommends to the RTM a transfer out of $44,869 to the sewer utility fund to fund salary changes pursuant to the collective bargaining agreement for the water treatment employees union. This transfer will increase the fiscal 22 budget in the sewer utility fund from $4,574,073 to $4,618,942.
I'll move it, Joe.
Moved by Charlie.
Second.
Second by Jeff. Discussion. All in favor?
Aye.
Okay, next is town employees for fiscal 21 and fiscal 22. Margaret, do you have any comments with regards to this 2% wage increase overall?
Now, again, this is delegated by the contract that was approved last year in the middle of the year, and we're getting around to moving it out this year.
Okay, so this one comes for fiscal 21. It's going to come from contingency $25,996. And it's from contingency, and it's going to go into multiple wages and salary accounts for planning and zoning, $2,018, technology, $19.15, human resources, $29.87, police, $11.29, building, $68.23, engineering, $1,999, senior center, $4,023, Willoughby Wallace, $522, various accrued payroll expenses for different departments for very small amounts, which I'm not going to read, and all totaling less than $100, and a transfer out to the animal control of $1,807 and human services fund for $2,680, and that totals $25,996. Also included, so that is that's a transfer, so we should vote on that transfer specifically. So I'll take a motion
I'll move it, Joe.
to move it. Okay, been moved by Harry,
Second, no, Bob.
moved by Bob.
Yeah.
Okay, Bob, and who seconded that one? Harry? Okay. Discussion, all in favor? Aye. And then there's a transfer into the animal control of 1807 and a appropriation, wages and salaries of 1,800 and accrued payroll expense of $7. Take a motion on that.
I'll move it. I'll second it.
All in favor?
Aye.
And then we have to amend the budget. So resolve that the Board of Finance recommends to the RTM a transfer out of 1807 to the Animal Control Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. Transfer will increase the fiscal 21 budget in the Animal Control Fund from $468,658 to $470,465.
I'll move it. Second it.
Been moved and seconded. Discussion. All in favor?
Aye.
Aye. Okay. There's a Human Services corresponding fund motions or resolutions required. Operating transfer in $2,680 and corresponding expenditure appropriation increase, wages and salaries $2,629 and accrued payroll expense of $51. Take that in the form of a motion.
Move it.
I'll second it, Joe.
Moved and seconded. Discussion. All in favor?
Aye.
Aye. And resolve that the Board of Finance recommends to the RTM a transfer out of $2,680 to the Human Services Fund to fund salary changes pursuant to the collective bargaining agreement for the Town of Branford Employees Union. This transfer will increase the fiscal year 2021 budget in the Human Services Fund from $1,656,253 to $1,658,933.
Move it.
I'll second it.
Moved by Charlie, seconded by Jeff. Discussion. All in favor?
Aye.
Aye. I think
That's it.
I think you're good.
Yeah, thank you all.
Thanks, Margaret. Okay. Item number 15 is to consider and, if appropriate, approve various budget transfers for fiscal 21. And this is requested by the Finance Director. First one is tax appeals and other legal from contingency $69,000 to legal expense $50,000 and expenses and claims $19,000 for a total of $69,000. Jim, you want to hit the highlight on this one?
Yeah, we have two items there. 69,000 would be coming from contingency. That covers the shortfall in the account. It's actually a little less than that, but in past years we've gotten some bills that come in a little bit later because someone's on vacation. So I wanted to give myself a little room here. Essentially, the legal account is short by about $44,800, and the expenses and claims is short by about just over $14,000. As you know, we have our basic legal fees for general administrative costs, general advice and counsel, which is approximately about $190,000 that we spent on that. We did have some large litigation items, the Parkside Village and the Shoreline Shellfish were roughly about $48,000 and $29,000 in round numbers respectively. Crescent Bluff was over $50,000. And then we have another matter that came in late towards the end of the fiscal year of about $25,000 where outside counsel was used. And the Crescent Bluff, as many of you know, is handled by an outside firm too, Robinson and Cole. On the expenses and claims, that largely related to appraisal services connected with the tax appeals for the most part.
Thanks, Jim. Questions from Jim on this?
I'll move it, Joe.
Been moved.
Second.
Seconded by Charlie. Discussion? All in favor?
Aye.
Aye. Okay, thanks, Jim. Next is municipal insurance, from property insurance, $35,000 into insurance damage, $35,000. Jim?
Yeah, and again, when there are basically damages that occur, we do have deductibles. And so we end up hitting the insurance damage account. They vary anywhere from accidents, et cetera. Generally, as I've said in the past, we have a lot of vehicles, and they do get into accidents. There are deductibles, et cetera. This $35,000 supplements the budget of $75,000 to cover these items. We also do, when we get insurance checks back, less our deductibles, we also take money in on the income side as well.
Okay.
I'll go ahead and move it, Joe.
Moved by Robert,
I'll second it.
seconded by Jeff. Discussion? All in favor?
Aye.
Aye. Thanks, Jim. And special detail request here is increased special wages of $660,000. And I'm just looking at this. One is the revenue, and the other is these are on both sides, right?
Yes.
Yeah.
Yep.
So the first one is the actually revenue item, the 450 account of $160,000, and then special detail, the expenditure side is $160,000 increase, and
there's a resolution to increase the budget. Yeah.
Why don't we take the transfer first, and then we'll increase the budget?
Yep.
I'll move it, Joe.
I'll second.
And moved and seconded. Discussion. All in favor?
Aye.
Aye. And then corresponding resolution here. Resolved that the Board of Finance recommends to the RTM an increase in the appropriation for fiscal year 2021 general fund budget from $119,517,730 to $119,677,730. This increase will be funded through an incremental increased estimated revenues resulting from special detail receipts.
I'll move it.
Moved by Charlie.
Second by
Jeff. Discussion. All in favor?
Aye.
Aye. Thanks. Thanks, Jim. Next is emergency management. Move from contingency, $13,000. Transfer into stipends, $13,000 within the emergency management budget. And
actually, this creates the emergency management budget.
This actually
for that year.
does, yeah. This is for 21, fiscal 21. Because we've already spent the money.
Basically, this is for, right, so basically when we were, the emergency management was created last year. It's in the 21-22 budget. It was being formed in March. March, as you know, is when you come out with your recommendations. So looking back, it looks like it was kind of missed in the mix.
Okay.
I'll go ahead and move it, Joe.
Moved by Bob,
Second.
seconded by Harry. Discussion. All in favor?
Aye.
Next is from contingency, $10,000 into tax refunds. And as Jim points out here, these are for prior year levies to balance out the budget request or the budget.
Move it, Joe.
Moved by Jeff,
Second.
seconded by Charlie. Discussion. All in favor?
Aye.
Okay. Next, we have elections from overtime, 2,000, from seasonal and part-time, 11,760, Professional development, 1960, other purchase services, 4,500, moving and storage, 1,280, and contingency, 52,497, for a total of $73,997. Moving into the expenditures of part-time clerical, 7,644, election workers, 52,146. Building rental, 500, equipment rental, 3,000, postage, 1140, advertising, 1045, meal supplies, 2201, furniture and fixtures, 5,680, and purchase services and repair, $641, for a total transfer request of $73,997. This is with regards to,
Yeah, actually, the registrars are here to present, but it relates to, typically the Board of Finance doesn't, and the art team doesn't budget the primaries, and then the primary was actually moved, and then you had some additional items related to COVID, I believe, but.
so they're gracious enough to attend, so we'll let these gentlemen. Good morning, good evening. Don and Dan.
Yeah, these expenses basically resulted in, typically we do not budget for primaries. So the primary that took place was to take place in April, and then again in June, actually took place in August. So those expenses that involved moving some of our voting districts, remember the voting districts were consolidated in the primaries, and then there were also a couple of the polling places were moved in the general election in November. So there were expenses involved in that. There were expenses involved in buying new equipment. We needed to buy, for instance, a cabinet for storing the absentee ballots that was recommended by the Secretary of State's office, and we indeed did that. There's also expenses involved in reprogramming the cards for the tabulators. That's an expense that was a little higher than we expected to be. So those are the types of things that led to the increase in this funding that's what we're asking for. The other thing is that we, under the recommendation of the Secretary of State's office, hired more people to run the election than we normally do. We had about 150 people working the elections in November. That was to assure that people had safe distancing when they're standing at the polls, and to make sure that there was an orderly process going into the polls and leaving the polls, and keeping everything in a safe and sanitized manner. Also included, we had some expenses, including shields that we had to have available in the polling places, and we needed also such things as hand sanitizer and mask. So some of those expenses were picked up by the state, and some of that money was given to us in the state, but not all of it. So that's where some of these expenses have come in.
Okay, thanks, Dan. Questions on this transfer?
I'll move it, Joe.
Been moved by Jeff.
I'll second.
Seconded by Charlie. Discussion? All in favor?
Aye.
Aye. Thanks, John. Then we have some miscellaneous transfers. And from probate, office supplies, 600. From executive, CCM, 1150. From consulting, building inspection, 800. From other supplies and conservation budget, $260, and postage and the tax, $1120, for a total of $3,930. Transferring into probate microfilming is $600, executive board clerks $900, executive budget Connecticut Council of Small Towns, $250. Building Inspection Online Services, $800. Conservation Board Clerks, $260. In the Tax Department, Tax Billing Process, $1120, for a total of $3960. Jim, these are just various cleanup?
Yeah, these are cleanup items that I'd probably save people from coming to a meeting, whereas, they're all from within each department's budget. So, for example, probate is covered by probate. The executive covers those two items. Consulting and building is covered by another building account. Same with conservation and tax.
Got it. Okay.
I'll move all these, Joe.
Been moved by Jeff.
Second.
Second by Charlie. Discussion. All in favor?
Aye.
Aye, thank you. Number 16 is to consider and if appropriate, approve a request from the town clerk for the following budget transfer for fiscal 21. From computer indexing, $3,477, into expanded hours, $748, accumulated sick, $1916, and office supplies, $813. And Lisa has provided a letter of explanation. Would you like to go over that, Lisa?
Sure. So last year we had, last July, we had a retirement of a 21-year tenured employee. And so $1,900 was for accumulated sick pay payout. Also, the expanded hours of $748, that's expanded hours is the difference between their 35-hour work week and 40-hour work week, which is a straight time payout, not overtime payout, and that was due to some extra hours for the presidential preference primary. And then we had a little bit of overage on our office supplies account, due predominantly to the election cycle.
Okay.
I will say that, just a little plug for us, on the revenue side, we had an overage of $497,820 in our three revenue accounts, which is the online, the revenue share for copies that are purchased online. Our other town clerk's money account was $109,942, and then town conveyance tax was over by $370,677.
That's great. Thank you. Questions from Lisa on her budget transfer or her revenue success?
I'll move it, Joe.
Moved by Jeff, seconded by Bob. Discussion? All in favor?
Aye.
Okay, with no other business to come before the board, I'll entertain a motion to adjourn.
So moved.
Second.
Moved and seconded. All in favor? Aye. All right, thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.